on Business Incorporated today. Kenya currency depreciates. And in Ghana, a box of tomatoes has gone from 600 cedis to 2,500 cedis. And Morocco to get $5 billion from the International Monetary Fund. Good afternoon. Welcome to Business Incorporated this afternoon here on Channels Television. I'm Ini John Mekwa. Well, let's start off as usual with the stock market. Beginning here in Nigeria, we see that the NGX is undecided at intraday after closing in the negative 0.09% yesterday. At intraday today, it has remained unchanged. We'll see which way it will turn to at the close of trade. Let's look at other markets now. In South Africa, JSE, we see is in the positive, 0.52%, while the EGX is on the negative side, 0.25%. And Kenya closed yesterday on a good note, almost 0.5% in the green at the close of trade. We move over to the Middle East, where we saw mixed sentiment at intraday, starting with Abu Dhabi in the UAE, marginally down, 0.02%, Dubai, 0.13%. in the negative. And then in other region, we see Saudi Arabia looking good, almost 1%, 0.75%, and Qatar even much better, 0.94%. Now let's move over to Berlin, Europe now, and see what's going on there. One of the biggest news today coming from Germany is that the German government is sanctioning EY, that's formerly known as Ernst & Young. The company was the auditor for Wirecard and missed one of the biggest financial fraud cases in German history. Well, thank God we do have Lars Holter there joining us from Berlin to paint the picture right for us. Hi, Lars. Good afternoon. So what exactly is the offense of EY?
Well, because they didn't do their job right the last time. EY is indeed one of the largest accounting and auditing firms. It has the highest paid experts tasked with going over other companies' books. But when they audited German financial firm Wirecard a few years back, they failed to spot what should have been obvious. There was massive fraud, hundreds of millions in income and revenue booked that never existed. Wirecard had accounts abroad. Some of those didn't exist either. Bank statements were forged, and even worse, EY signed off on the books even after media reports had already raised red flags about accounting irregularities. Now, when Wirecard imploded in 2020 with almost $2 billion missing, it quickly became clear that the books did not reflect the real situation of the company at all. And that, of course, is exactly what an auditor should catch. The German government says there's only one explanation for EY's failure, that they were professionally negligent.
So for this negligence, what's the punishment for it?
Well, the government's auditor oversight body, that's called APAS, has imposed a fine of 500,000 euros on EY, and they also fined some individuals within the company. But more importantly, the company is now banned from providing auditing services to companies of public interest for 2 years. So here's some background on that. Large companies have to be audited every year. And currently, EY is auditing 12 of the 40 companies that make up the German blue chip index DAX. That's almost a third of the business. Competitors are PricewaterhouseCoopers, KPMG, and Deloitte. And now by law, companies in the DAX have to switch auditing companies every 10 years. Now, 9 DAX companies have to sign with new auditors this year alone. And among those are major clients of EY's like Siemens and Siemens Energy. EY will so lose their business and can't take up any new clients. And that, of course, is a huge loss for the firm.
Huge loss, Lars, and it looks like they will even lose some of their existing clients. But I mean, let's look at the market now. I hope this is not affecting them.
Well, energy shares are really something investors are keeping an eye on. It started yesterday, of course, on the first trading day of the second quarter. When OPEC cut their production quota, it gave crude a boost, and that in turn moved energy shares. The biggest winners here were ExxonMobil, BP, Marathon Oil and such. But other shares had a bit of a rougher day because higher oil prices, of course, are a problem for the economy in general, especially with inflation already pretty high. Today, some analysts have once again again advocated for higher interest rates to fight inflation, and markets will now have to sort all that out. And some analysts say this could take a few days.
So much, Lars, for giving us up to date there from Germany. Enjoy the rest of your day. Well, we are still talking, regulators and fines, but this time coming from the UK, and we have Juliana joining us from our studios in London. Juliana, good afternoon. I was just talking to Lars there about EY being fined for negligence. Back in the UK, we see TikTok is also getting fined by the data regulator.
Good afternoon, Innie. That's absolutely right. It's not been a good 3 or 4 months for TikTok that's been hauled in front of different regulator courts about the use of its data, particularly when it concerns children. And we've had an update from the Information Commissioner's Office here in the UK, and they've doled out this £13.5 million fine to the owners of TikTok, which is ByteDance. And this is because during a period of time, they were allowing under 13s to sign up to the app and use it. And we know that under data laws in the UK, that is absolutely illegal. You are not allowed to join a social media site if you are under 13 years of age without parental consent. Now, we know that lots of children, anybody who knows any savvy children, they typically change their date of birth and try and get on the app anyway. But that's besides the point. TikTok broke the rules and this fine has been handed to them. There is a statement here from a TikTok spokesperson. They said, we invest heavily to keep under 13s off the platform, and we have over 40,000 people working within our safety team around the clock to help keep the platform safe. We will continue to review the decision and are considering the next steps. They said they disagreed with the ICO's decision, but it's not just UK regulators that are really starting to crack down on what is the world's most popular site. I've got a TikTok site, Innie. It isn't easy to maneuver unless you're a millennial or somebody that knows how to do an amazing dance, but it is the most popular app in the world. But because its owners are ByteDance and they are Chinese, there is a major concern with that. And that's why we saw this morning Australia, before the IOC news broke, they've also followed in the same footsteps that we saw in Britain and America, and they've banned TikTok from being used on all government devices. And we've seen more of a crackdown by the UK, by the US and by the EU when it comes to regulators. Now, the reason why this is quite a significant story is because there are some suggestions that down the line, TikTok may be banned. And that is kind of where we are leading to. I think the US have said that, they're willing to ban the site if any Chinese who have shares in the company don't sell the shares. Some would say that that is an absolute, farce, and that the Chinese shouldn't be forced to do that. But we are kind of in an information war, a data war, a regulation war between China and the West. So let's see how this progresses. But as for now, they've received this mega fine, but it was half of what the ICO said that they were going to put towards TikTok in the first place, which I think was about £27 million. But because they went along with the findings, it was reduced by 50%.
Yeah, well, as you've said, TikTok is not having it easy. And I'm glad you mentioned that, because at the bottom of it looks like it's China, West, Russia fights and information data fights right there. But anyway, I do hope that TikTok is not moving the market to the red side this afternoon.
It's not actually. Short week, Friday, Easter, Good Friday, getting ready for the Easter bank holiday. It seems that investors are in a good mood. I think this is really led by the oil majors that are pulling up the FTSE and the blue chip index at intraday. The all share is up by 0.15%. The FTSE 100 is up by 0.11%. And the FTSE 250 is up by nearly 0.5%. In the currencies market at intraday, the British pound is trading up against the US dollar by 0.72%, up 2 against the euro by 0.56%. And also the British pound is trading up against the Japanese yen in triple-digit figures by 1.16%, Innie.
Yeah, thank you so much, Juliana. I wonder when the excitement on the oil stocks, coming from that surprise cut by some
Will start
OPEC
to wane.
members, will wane away. But
Yeah.
anyway, as you always say, we will watch and keep our fingers crossed.
We shall wait and see.
All right, let's move to other markets now. Asia-Pacific markets rose on Tuesday after the Reserve Bank of Australia held its cash rate target steady at 3.60%, with the Australian dollar weakening against the US dollar following the move. Let's look at the numbers right there. The Nikkei looking good at 0.52%, 28,188.15. The Shanghai Composite looking even better, 0.72% at 3,296.40. The Hang Seng Index marginally up 0.04%, but 20,409.18. The Kospi is the only one we see in the red, 0.18% at 2,472.34. In Australia, following those rates that were held steady, we see the market is excited about that, 0.63% at 7,223 points. So Australia is driving the Asian markets at this time after that rates were held steady. We move on to the United States now, where stock futures rose slightly Tuesday as the markets remained resilient even after a spike in oil prices. Remember that oil prices after the surprise cut? Well, futures tied to the Dow Jones Industrial Average were, however, up there. The number 0.39% at 33,591. The S&P 500 at 4,136 is in the red marginally though, so there's still hope, 0.04%. And Nasdaq 13,224 at 0.58% in the red. Let's leave the market now. Well, move to another market, the global oil there. This is the mighty mover been since yesterday. Well, oil prices rose today after OPEC Plus plans to cut more production jolted markets the previous day, with investors' attention now shifting to demand trends and the impact of higher prices on global economy. Brent crude futures went up 46%, that's 0.5%, to $85.39 a barrel. U.S. West Texas Intermediate crude futures was also trading at $80.95 a barrel, and that's up 53 cents or 0.7%. Both benchmarks jumped more than 6% yesterday, Monday, after the Organization of the Petroleum Exporting Countries, that's OPEC, and its allies, including Russia, which is OPEC Plus, rocked markets with Sunday's announcement of plans to lower output targets by 1.16 million barrels per day from May. The latest pledges bring the total volume of cuts by OPEC Plus to 3.66 million barrels a day. That's adding that 2 million barrels that they cut last October, and is equal to about 3.7% of global demand. In the metals market, gold prices edged lower on Tuesday as traders assessed the likely path of the Federal Reserve's monetary policy after data showed a slump in U.S. manufacturing activity, and OPEC Plus production cuts sparked fears of inflationary risks. Spot gold was down 0.1% at $1,982.33 per ounce. U.S. gold futures dipped slightly to $1,999.70. Gold in the near term could see consolidative price action in the absence of a fresh catalyst, and as markets monitor the extent of price gains in oil, as that may throw a curveball on inflation outlook and complicate monetary policy decisions. All right, let's take a break now. When we come back, we do have a lot of stories for you, especially coming from Africa on the other side, here on Business Incorporated. Welcome back. Well, this is the other side of Business Incorporated, and as promised, we have a lot of stories for you, starting with a conversation on coal. Coal is obviously an important commodity. It's used for electricity generation, steel production, cement manufacturing, and although the share of coal in power generation has been declining over the years, the Russia-Ukraine war has seen a revival in the use of coal. Recently, we saw the price of coal drop by about 49% to $198 for a ton, and it went from $389 at the start of the year. What's the reason behind this, saying that there may be an increase in the demand. Well, we do have Daniela Omudo Dede, analyst with financial derivatives, joining us from Victoria Island to give us what she thinks about this. Hi, Daniela. Good afternoon. So one would have thought that since we have seen more countries go back to coal following the hike in energy prices because of the war, which is still ongoing in Ukraine, one would have thought that the price of coal will increase. So why is it declining?
Good afternoon. Thank you for having me. So, first of all, the key thing to note is that the coal market is largely influenced by natural gas. So, last year, during the Russia-Ukraine war, the ban on Russian exports kind of stifled the supply of gas, and that made coal more expensive as people had to switch to alternative sources of energy. It made coal more expensive relative to pre-pandemic prices. Recently, natural gas has also been on a downward trajectory. The price of natural gas has been declining. So coal prices have also fallen and might even decline further to compete with natural gas. Another reason for this is also low demand and high coal stockpiles. For example, last year, there was a warmer than expected winter weather, and as such, less coal were burnt. As a matter of fact, between December 2022 and January 2023, coal stockpiles has increased by 4.6%, and this was a period in which coal stockpiles usually would decrease. There's also been a switch to use of renewable energy. In the United States, for the first time, there was an increase in the energy generated through renewable sources like biomass, hydropower, solar, and wind, rather than using coal to generate power and electricity.
Yeah, so we see a lot of countries obviously embracing the energy transition, renewable energy, clean energy, and all of that. What does this say to the future of coal?
Yes, so coal has some disadvantages in the sense of, for example, pollution, but then it's not going to go out of play because there are still some economies that have not been fully able to tap into renewable energy sources. Some of them cannot even afford it. So for these economies, for example, if there's no natural gas, they'll have no choice than either burn coal or go black or have blackouts. So the use of coal in generating electricity is still going to continue in the long term.
Okay, so now let's look a little bit at China. We know that China is the second largest economy in the world. We also know that it is the world's single largest greenhouse emitter. And we also know that it is the largest country with human cost emissions. And it did not join that pledge, to commit to zero emissions. And it's still leading, Meanwhile, the world is preaching clean energy. Isn't that a kind of contradiction when you look at the state of China and, the issue of renewable energy?
Yes. So the thing is, China has some sort of coal addiction. It's more or less like a love-hate relationship with coal. So at the same time, yes, they are one of the largest investors when it comes to clean energy, but they are also the world's largest burner of coal and the largest emitter of carbon. If you look at it, you see that China is actually trying to play safe in the sense that they are majorly focused on energy, or rather power security, rather than reducing their carbon footprint, like in line with the global carbon emission, or rather climate targets. So they are trying to play safe in the sense that they will try at any means to generate power and electricity as much as they can and as fast as they can. So at the same time, they are investing a lot in green energy, renewable energy sources, while they are also still heavily burning coal to generate power and electricity. So
I
guess because of this contradiction.
Yeah, I guess that's why a lot of some Africans think that, Africans should not be, pushed into this green energy because, if you have a country like China, you have a country like the UK still depending on coal, then where is Africa in that? But thank you so much, Daniela, for sharing your thoughts with us this afternoon.
Thank you. Thank you for having me.
All right, let's move to Zimbabwe. We're still talking electricity now. Residents in Harare, the west part of Harare, experiencing power outages because of worn-out electrical cables and are being forced to crowdfund for repairs. Well, a member of the Parliament for Harare West, Joanna Mamumbi, revealed this during a parliamentary question and answer session that residents in her constituency were paying for procurement and replacement of stolen transformers. Does that sound familiar? Well, according to her, residents in Harare West constituency are being told that the reason why there is no electricity is because the cables that are used for transmitting power are now old. Therefore, the residents are contributing a lot of money to replace those underground cables. Last year, the country finalized its power import deals with Zambia and Mozambique while retaining power import deal with South Africa. The International Monetary Fund has approved $5 billion credit line for Morocco, enhancing the North African nation's buffers and providing insurance against possible risks. The IMF's executive board approved the facility, which is available for 2 years. Moroccan authorities stated that their intention to treat the arrangement as precautionary. Morocco qualifies for the FCL by virtue of its strong policies, institutional policy framework, and economic fundamentals, and continued commitment to maintaining such policies in the future. The arrangement will enhance Morocco's external buffers and provide insurance against plausible tail risks on a temporary basis. The authorities stated their intention to treat the arrangement as precautionary. Now, in Kenya, the depreciation of Kenyan shilling is already hurting the Kenyan economy, with external debt now rising to 351 billion shillings. This means that the country's obligations grow larger because it must spend more shillings to acquire an appreciating dollar and then use it to repay loans. Since the beginning of the year, the Kenyan shilling has depreciated 7.37% against the dollar, 7.2% against the Chinese yuan, and 4.2% against the Japanese yen, and 9.6% against the euro. On Tuesday, the Kenyan shilling exchanged at 133 units to $1 and 145.43 to euro, 19.34 to the one. And then we come to Nigeria. It's also weakening of the naira, in this case, to a new low at the official market, falling 0.46% against the United States dollar at the spot market window. According to data published by FMDQ, where Forex is officially traded, the naira opened trading 461 naira 70 kobo and closed at 463 naira 50 kobo to a dollar. That was on Monday. This represents a 2 naira 12 kobo or 4.46%, almost 0.5% depreciation in 24 hours. That's against 461 naira 38 kobo posted in the previous market session on Friday. The domestic units reached an intraday high of 460 naira and hit a low of 466 naira before it eventually settled at 463 naira 50 kobo for a dollar at the close of business. In Ghana, price of tomatoes on local markets in Kumasi have seen astronomical increases in recent times. A box of tomatoes that sold at 600 cedis earlier this year now costs 2,500 cedis. And importers blame the upsurge in prices on the high exchange rate of the francs and attacks on farmers by importers by the militant group Boko Haram. This came to the fore when the Euro News interacted with some traders in tomato markets in the metropolis. A retailer at Racecourse Market said that the team that filled tomato fruit sold at 10 cedis now sell at 50 cedis. We're still in Ghana. The government raised a total of 14.16 billion cedis via the treasury bills in March. This is out of the total bids of 16.70 billion cedis as investors' demand remained robust. In a bid to reduce the debt burden, the yields dropped sharply, with a 91-day yield at 18.88%, which is more than 17% month on month. And then also the 182-day and 364-day bills closed lower at 21.44%, and that's less than 14% month on month and 25.66% respectively. Analysts believe that the investor interest will remain firm for upcoming issuance in April 2023, though some risks persist. Well, those are the stories that you were promised for the second half. I hope it was worth your time. I will do it again tomorrow. I'm John Mekwa. Enjoy the rest of your day.